Welcome to Halifax, America's tutorial on using worst drawdown data as a criterion for evaluating automated trading systems. Let's suppose you are an investor who is interested in subscribing to an automated system to diversify your portfolio. One main challenge you will come across is trying to find a system that matches both your financial goals and risk tolerance. Our focus will be on the latter. Risk tolerance is a critical factor in choosing an automated system. Not only is risk tolerance subjective, it must be defined in real numbers to objectively establish a precise loss limit for your account per system. Let's get started. Automated systems commonly list worst drawdown as a part of its performance metrics. Worst drawdown is the largest loss a system had incurred during the history of its performance. I need to emphasize that worst drawdown data is historical. This historical information presents us with both negative and positive implications. Starting with the negatives, worst drawdown is a historical marker only. It does not guarantee a limit for future drawdowns, as it can always be exceeded in the future. After all, we're dealing with speculation, and past performance does not guarantee future results. Now let's look at a few positives. On the positive side, you can view a system's worst drawdown as a marker for its performance and stability. This, of course, depends on how long a system had been trading, and there's no criteria determining how long a system should be trading and accumulating results to present a valid worst drawdown. But if you follow or invest in a system, you can at least use its historical drawdown as a reference point. If you are currently experiencing a drawdown, then you should not be surprised if the loss is above its worst performance. If losses exceed its worst historical loss, then that event marks the juncture in which you might want to reconsider investing in the system. If you plan on using worst drawdown as criteria for selecting an automated system, then you should probably define your loss limit. You should always base your loss limit on the amount of risk capital available for investment. If you have $20,000 to invest, for example, what percentage can you afford to lose if a system does not perform according to your expectation? This is a subjective matter, but keep in mind that every system developer has a suggested capital requirement, which you should carefully consider and evaluate. Now let's suppose you have $20,000 to invest and you want to set your loss limit at 15%, which is equivalent to $3,000 per system. Now you have a well-defined dollar amount. Where do you go from there? Okay, here's how to do it. Log on to our Algo IQ homepage, click on the Filter Systems menu, go to Advanced Filters, and select Worst Drawdown. Okay, you'll see here a range of the worst drawdown recorded among our 500 plus systems and the least drawdown. What you want to do is go to the worst drawdown and change that figure to $3,000, which is our example loss limit, which again is 15% of $20,000. Okay, so we've changed that to $3,000. Let's click Add and OK. And then find the Worst Drawdown tab, click on it, and there you have it. You have the system that currently has the least amount of drawdown, and if you were to scroll down, you will eventually get to the system that has the worst drawdown of $3,000, which is your loss limit. At this point, you have quite a few systems to evaluate that fit your worst drawdown criteria. In other words, that don't exceed $3,000, which again is our hypothetical loss limit. Should you select a system based on that? Of course not. You're going to want to look at a few other things, and we have a few other tutorials to help you really decipher the metrics so that you can more clearly establish the criteria you're looking for, you're looking at, to select a system that matches your risk tolerance and your financial goals. You'll want to look at winning sessions, profit factor. Again, you want to look at the distribution of profits and losses, including the drawdown. There are quite a few things. So feel free to give us a call or send us an email at team@halifaxamerica.com. If you have any other questions, we're very willing to help you. Or take a look at our other tutorials and educational material aimed at helping you better evaluate trading systems. Take some time to read our risk disclosure. It's important to remember that past performance does not necessarily indicate future results, and that hypothetical performance results have inherent limitations, many of which are described in this document. So do yourself a favor, pause the video, and take some time to read the disclosure. And finally, we want to thank you for taking the time to view our tutorial video. We wish you success, and we'll see you next time.